Hey traders, Raghi here. I'm going to walk you through the trades that we took in the Sector Secrets Mastery this morning. It's actually just one trade. So today, let me set the scene a little bit because not every day is going to be the same. And sometimes we have schedule adjustments. So today, I had an eye doctor's appointment. One eye was dilated. I came back and luckily, because my charts look very colorful and very bold, even with one eye completely dilated and out of focus, I could still find some trades. I didn't start looking until 10 o'clock. So for those of you that are thinking, okay, Rog, does this mean you trade more than that 1 hour? Nope, the trading day still starts for me at 9:35 earliest, and then we'll go to 10:35 a.m. Eastern latest. So today I had a 35-minute window, and this is what we did. At 10:28, right there at the edge of my day trading window closing, we had what I call a very aggro Amazon setup. So I'm going to walk you through what that means because these aren't just nicknames, all right? So we've talked about setups before. Let's talk a little bit about position sizing. There are 3 scale-ins that I will look at, up to 3, for any trade: day trading, swing trading, long-term account growth trading. And the aggro is the first opportunity or the first scale-in. But it also means there's only a certain number of dollars that I'm going to allocate at that trigger. So in this case, we were looking to buy September 12, 230 calls, and the aggro trigger was specifically 229.50. Now, this goes out at 10:28, so right around this candle here. And you can see the low on that candle was 229.34. So it went 16 cents below the trigger, which is no significant heat whatsoever on the trade. Now, as this sinks down, you might say, well, Rog, why is that trade actually a trade? This level right here, this Darvis level, is support. And we tested that support level just after 10:28 and tested it again at the low of the 10:30 candle. These are 5-minute candles. And what the idea was to buy the calls when we got there. So what does very aggro mean? That means that I'm below the previous session close. So there's something I don't like about the trade, and that was it right there. So I'm going to reduce position size on that. Now, in the Sector Secrets Mastery, we have a spreadsheet that is a position sizing guide. You plug in your account balance, you plug in your desired account risk, and then you also plug in your stop loss. And then a allocated amount of dollars for all 3 of the scale-ins, aggro, moderate, and conservative, are then calculated. So you know you can't buy any more than a certain number of dollars worth of contracts. So it's never a fixed contract number, it's a fixed dollar number. So if it's a low-cost option versus a higher cost option, you'll buy fewer in a high cost and more in a low cost, but you're still spending the same number of dollars. So you can see right here during this 10:25 candle, and into the 10:30 candle, we had the trigger, which is 229.50. We always determine these beforehand. Now, having reduced budget and having reduced desired account risk, I'm going to naturally buy fewer of these contracts. I'm going to show you what these September 12s were printing for at that time. So I love to actually chart the price of the option, especially once I have the setup and I know what I want to buy, because I get a really good feel for where that option has been, what it's traded for, and I'll have a much better idea in terms of getting a fill. Now, in this case, notice the 10:20 candle traded down at $1.50. And then during the candle we entered at, it traded down to $1.48. And then during the 10:30 candle, it traded down to $1.54. If I know that $1.50 area was where my option price was before, I've got a pretty good idea of what I'm going to pay. And so I put out a $1.50 bid for those options to buy those, as you can see here, September 12, 230 calls. So here we paid about $1.50. Could I have gotten a little bit more? Actually, no, I paid $1.55 and $1.50. So I got 2 spills. I spread out my trade. I peppered the bid. So a lot of times if I have enough contracts, and I trade a rather large day trading account, I'll put a bid out, limit order to buy at, say, $1.55. At $1.50, I might even put in $1.45 if I have still more budget. And whatever fills, great. Yeah? Okay. So then what happened? Well, let's go back to the chart of Amazon. And again, these are 5-minute charts. So the first thing I know is that my scale out is 231. So when price gets to 231, I have no choice but to scale out of up to half of the position. So here we see we got up to 231 right in here, 11 o'clock. So it took about a half an hour to get to that level. This isn't about get in now, get out now, quick in and out. I'm waiting for a particular target. So let's go back to the chart of the 230. So here, once again, we know that we got in at this 1025, even 1030 candle. And then at the 11 o'clock candle, here we are trading at about 245. And that was the trade. Now, here's what happens afterwards. This thing did a whole lot of nothing. Nothing. We kept bumping our head against that same level again and again. In fact, you could see the previous Darvis resistance up in here. We kept testing that. And we even had a Darvis floor down in here. Now, this is where traders are going to use the automation on the chart to make some decisions. Worst comes to worst. When prices get back down to what we paid for the option, in this case, let's just use $1.50 approximately. When it gets to $1.50 to $1.45, I'll use a 5-cent cushion. I'm going to close the trade out. That means I'm not risking really any more than I paid. So yes, this is unrealized gain that I'm risking, not my capital. Remember, I've already scaled out and realized a profit on up to half of my position up at that level at about 250. For some traders, they'll say, Rog, we keep bumping our head again and again at this area. I'm going to go ahead and scale out and close the trade. Perfectly fine. Automated levels allow you to make unemotional decisions based on the price, based on the data on the screen, not our gut, not what we feel, right? Keep the feelings for poetry, right? Keep the feelings for the ones you love. Keep them out of your trading. So ultimately, some traders scaled out, game over. Other traders will use the support of the Darvis, game over. For me, I was pretty busy this afternoon. I just put a stop loss in there at $1.45. It hit. And then that's really the two things that I'm going to focus on. Now, as we can see, this thing sunk. Please remember, and this is another thing to keep in mind, I love the morning session. I want to avoid 11:30 to 1:30, and I do not like the afternoon session. That's just me. Some traders are great at the morning. Some traders are great at the afternoon. I love the morning. I like getting my day trading out of the way, see what trades I can find, make a little profit, and stop trading at 10:35. And that is what we did today in the Mastery.